In April, the manufacturing landscape in the U.S. Mid-Atlantic region experienced a remarkable resurgence, propelling the sector to its highest level of expansion in 2 years. The Philadelphia Fed's Monthly Business Conditions Index, a key indicator of manufacturing health, surged to an impressive 15.5 from 3.2 in March. This substantial leap surpassed the expectations of economists, who had anticipated a more modest reading of 2.3. Even the most optimistic forecasts among the 34 economists surveyed were outstripped by this robust performance. The significance of this upturn cannot be understated, as it not only reflects the resilience of the manufacturing sector, but also hints at broader economic recovery and growth potentials. At the heart of the surge lie the twin engines of new orders and shipments of finished goods. New orders, a bellwether of future production, reached their highest level since August of the previous year. This surge suggests a surge in demand for manufactured products, possibly fueled by a combination of factors such as pent-up consumer demand, fiscal stimulus, and improving economic sentiment. Similarly, shipments activity registered its most brisk performance since August 2022, indicating increased production and efficient delivery of goods to consumers and businesses alike. This uptick in both orders and shipments not only bodes well for the manufacturing sector, but also has positive spillover effects on related industries and the overall economy. However, amid the euphoria of this manufacturing resurgence, there are looming concerns about renewed input cost pressures. The Prices Paid Index, which tracks the costs of raw materials and other inputs for manufacturers, surged to its highest level since December. This suggests that manufacturers are facing mounting cost pressures, which could potentially squeeze profit margins and lead to higher prices for consumers. While prices received by goods producers saw a slight increase, it may not be sufficient to fully offset the rising input costs, raising the specter of inflationary pressures in the broader economy. Balancing the need to contain inflation while supporting economic growth poses a formidable challenge for policymakers, particularly against the backdrop of a rapidly evolving global economic landscape. Moreover, the juxtaposition of robust manufacturing activity with sluggish employment trends paints a nuanced picture of the sector's health. Despite the uptick in production, factory employment continued to decline, reaching its lowest level since May 2020. This persistent weakness in employment growth underscores the structural challenges facing the manufacturing sector, including automation, globalization, and shifting consumer preferences. The lackluster job growth in manufacturing stands in stark contrast to the broader economic recovery, where job gains have been more robust in other sectors of the economy. Addressing the employment challenges in manufacturing will require concerted efforts from policymakers, businesses, and other stakeholders to reskill workers, foster innovation, and create a more inclusive and dynamic workforce. In conclusion, the surge in manufacturing activity in the U.S. Mid-Atlantic region is a welcome sign of recovery and resilience in the sector. However, the challenges posed by rising input costs and sluggish employment growth underscore the need for proactive policy measures to sustain the momentum and ensure the long-term viability of the manufacturing sector. Finding the right balance between promoting growth, containing inflation, and fostering job creation remains a delicate task for policymakers as they navigate the complexities of the post-pandemic economic landscape.